Bitcoin's collapse from 126 to sub 80K. It is bouncing back a little bit at 85 today. Was it the canary in the coal mine? Did it tell us pain was coming to the over-levered AI trade? Is there now some shenanigans going on in AI that we need to be aware of? Well, when in doubt, I go to a Wall Street veteran, the one and only Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Yeah. So Bitcoin is certainly an interesting one right now because it has been pretty vicious on the downside. I think I would address this in two different ways. I think up front, maybe I'll just describe the way that we see Bitcoin at large versus the narratives in the market. And then also kind of the systemic sell-off that we've seen. I think Bitcoin was largely at the center of all of that as well. So just kind of touching on two different things there. I guess the first one is just, what is Bitcoin? And I think that Bitcoin's a lot of different things to a lot of different people with a lot of different narratives. As we look at things in the market, what we do is we look at their characteristics in price movement. And I think that Bitcoin over the long term is not an inflation hedge. It's not a what have you, you name it, right? 2022, what happened to Bitcoin in the worst inflationary year we've seen since the 80s? It got smacked down 62 or something like that. I think Bitcoin is just, you can view it as almost a leveraged play on the stock market directly.
Well, specifically, I think it's even the NASDAQ 100. It's not the stock market. I think it's the NASDAQ 100. Is that fair?
Fair. Yeah. If you had to be more pointed on that, I would say the NASDAQ, but even the S&P 500 directionally trades with Bitcoin.
Okay.
But yes.
All right.
Yeah. Higher correlation is what you're looking at there. Higher correlation with the NASDAQ than with the S&P 500. And I think largely speaking, and this will kind of take us into the second point as well, I think that largely speaks to why we saw some tech sell-off as well last week as a function of Bitcoin. So Bitcoin just being now, again, just the ultimate risk trade, as opposed to being a lot of the narratives that are in the market, a fiat currency replacement, any of that nonsense. Yeah. So what we had now was all of a sudden you have this starting to gap downwards on Bitcoin. And it went from 126, I think it got to, down, and then started to eat away at those gains. And then what happens is there are crazy enough people in the market, believe it or not, that actually leverage Bitcoin, which, yeah, you're laughing and you're 100% correct because that's just lunacy to me. Unless you're taking 2% of your money and you're leveraging Bitcoin. Okay, I get that. But like if you're leveraging Bitcoin with any extension of your portfolio, that's any reasonable percentage, you're a nut and you're the ultimate gunslinger. So now what happens is they're borrowing money in effect to go out and buy Bitcoin. And if Bitcoin drops beneath a certain threshold, the bank knocks on the door and says, hey, Michael, you got to pay up for that. Right. And so then where do they source their cash from? Well, they're also the buyers on the other side of the equation of the high flying tech stocks. So then all of a sudden they start to sell down the tech stocks on the other side to cover their Bitcoin losses. And it exacerbates and perpetuates the entirety of the market downwards, as opposed to it just being Bitcoin centric.
Yeah, it's funny. I had a long drive the other day, and I listened to some folks talk about Bitcoin, and really these are, I would call these people Bitcoin maxis, right? So they're they're the folks that say things like Bitcoin solves everything, right? Which is, their opinion. So one of them, right, Tom Lee, actually, he's talking about some mathematical code error that allowed this big washout that one day, like $90 billion was washed out on one exchange. And,
well, that makes me feel more comfortable.
Yeah, exactly. There's code problems. I feel great. But again, it was interesting. And basically his point was, that took out a lot of market makers, and market makers have been trying to rebuild their stacks slowly, which is causing folks to sell. Other people are pointing at Bitcoin OGs, folks that have been holding for years, and the market hasn't been deep enough for them to sell, but now supposedly it is. And they were selling over 100K, right? When the price was 100K, and they were pocketing billions and billions of dollars. So, okay. So you have the OGs who, I don't know, do they believe still, or are they getting out or whatever? And, the last thing the thing that I think about, so this is just my interpretation after a couple of hours of listening to all of this stuff, was I think this is just, it's the most liquid thing that trades 24/7. And, that is where people go first to sell, right? If they need to raise liquidity because they're going to have a problem Monday morning, there's only one thing they can sell on the weekend to get capital.
Yep.
And then to your point, you just add in this stupid 100-to-1 leverage, and I'm like, you call them gunslingers, I'll call them idiots and morons. You're just going to be like, you can't go to the casino, even if you're hot at Vegas at the casino. They're going to eventually get you if you stay long enough, right? And that's just wild to think about.
Yeah, and I think I'll add a couple points here. So just on one that's very simple, and it's say, listen, when fear enters the market, you sell your highest risk asset, right? And if that happens to be the asset that's liquid after market hours, okay, even better. They're
all the best, yeah.
And then I think there's a new entrant into the markets, and I think this one's flying beneath the radar. And so you have these ETFs being launched now with Bitcoin, right? And so if Wall Street sees an opportunity to make money, they're going to seize that opportunity. So before, there wasn't really a natural place to short Bitcoin.
Oh, interesting.
And now you've got an opportunity with a vehicle where they can short that ETF and then benefit on the downside of the trade. So when they start to see the momentum build on the downside, you're going to have hedge funds now stepping in and shorting things like the ETF to exacerbate the downside in Bitcoin, where that was not available in the market before ETFs launched.
So let me ask you a question, because again, I've never been on Wall Street. This is your world, but I've got to imagine that Wall Street has a pretty good insight into the levered bets, right? They probably know about how much leverage is in the system. So they're probably doing some fancy math calculations going, hey, if we can force it from 101 to 99 or 90 to 91.
Yes.
Yeah. It just beats itself up. So what they could do is they could come in at 11:30 at night when the market is skinny and scarce, and they could just yank it. And then those auto sales, those margin calls, and then they boom, win, right? They print millions of dollars when no one's watching.
And maybe this is conspiracy theory, but a lot of the people that are providing the leverage are also the folks on the other end that are the managers of the underlying ETF, and they can see direct line of correlation there and say, okay, your leverage point is here, and if it breaks that glass floor, because it's a very glass floor,
it's very
the downside's there, so they can perpetuate their own downside on it.
Yeah. So now let's play this forward. We've kind of replaced history where today I checked this morning, Bitcoin's no longer 80, it's 85 or 86, so it's kind of off the bottom. We're at a short week, again, at least for tech stocks, right? Thursday will be closed. Friday will be a half day. We're heading into the end of the year. We got the Santa Claus rally at the end of December. How are we set up? Let's just talk AI stocks now. We'll stop talking Bitcoin and crypto. But are the AI stocks still over levered? Or is there any? I mean, it feels like there's some smoke, but is there fire with these AI chips being 6 years versus 3 years? As far as depreciation schedules, any real fire there? You just don't know.
Well, you just hit a really good nail on the head there. But before I even get to that, I'll just speak to stocks broadly speaking. Generally, in an upward year like this, what you would have is into the year-end buying, because active managers that may have trailed a benchmark or something that may have been more defensively positioned via tariffs and their scare and their fear around that, we're playing more defense. And then towards the end of the year, they're like, we got to play catch up, and we got to fix our books for the end of the year. When the snapshot's taken on January or December 31st, we want the book to look a certain way.
Yeah, like we were in the high flyers. Yeah, we were in there. Yeah, okay.
Yep. You're exactly right there. So typically that's what you would anticipate, and that's oftentimes what causes a Santa Claus rally, because at the end of the day, more years than not, you've got the market up going into year end, and then you got to play catch up on the other side of that trade. So typically speaking, you would expect an upward trend in the market towards year end. I think that the biggest AI is driving the economy. And I don't even want to talk about like, hey, just the stock market or just this subsector of technology. No, it is driving everything. The AI trade is dependent upon a data center that needs to be constructed. Then that needs the infrastructure behind it to be constructed. The deal needs to be financed with a bank. The banks are doing M&A, investment banking. Like the entirety of the economy is running on AI right now. And I think you've got a couple things, one maybe cosmetic in nature and one more reality in nature, that are causing this big question mark. The cosmetic one is just the underlying behavioral flaws, I'll call it, that Sam Altman has presented.
Yeah, he's been a little.
Yeah, go ahead. Because you've seen it.
Yeah, I've seen it too. I mean, Sam Altman. Again, he was on a podcast. I mean, that was the first one a couple of weeks ago, trying to basically, trying to explain how he can have something like $3 trillion in expenses when he's got 50 billion in income. And let's just say he didn't handle that question well, maybe a little snarky. And it's gotten worse, right? There was a talk later I think the next day by the CFO talking about the government being a, last line of defense or a bailout and stuff. Like, what are you guys talking about, right? If OpenAI dies, it doesn't freaking matter. We've got Google and Grok and all these other. OpenAI, go F yourself. What are you talking about? I mean, this is crazy talk.
But at the same time, OpenAI is involved in a lot of these circular trades, right? Which is why you've seen Oracle get eviscerated in the market right now.
Crazy.
So it's at the center of everything. And it was the namesake, AI could be defined in some people's terms, Kleenex tissue, AI, ChatGPT.
Agreed. It was the first mover. Agreed. Yeah.
And so when the godfather of the space starts to show these, and just to describe anyone that didn't see the actual podcast, basically Gerstner presented a very, very real question. Hey, and again, I'll rough the numbers. You've committed to $3 billion, trillion, whatever the trillion is, not billion, $1 trillion in spend, and you've got $50 billion in revenue. Like, how does that math?
How does that math, right? That's not girl math. That's crazy math.
Do that. Yeah. And so his response was, Brad, you want to sell your shares? I'll find a buyer. As opposed to legitimately coming up with an answer, he comes up with an asshole question and completely sidesteps it. And so that's a real problem there. And then the other kind of point I wanted to touch on here, and I talked about this on a video the other day on Instagram, and I got a lot of pushback on it, which is fair, was Jensen Huang is officially the world's greatest salesman. And what he does very, very well is he understands what the objectives in the market are, and he addresses them. And whether that causes him to talk out of both sides of his mouth or not, it doesn't matter. You don't remember a year ago, you remember right now.
Correct. Yeah.
And so coming into this call, what the concern in the market is that these chips get reinvented so quickly with so much better compute on the other side that their useful life is, call it 3 years. And by the way, this wasn't a lunatic thought, because Jensen had been talking about this a year ago, and the fact that they will continue to have perpetual revenue as people need to refresh the chips as they get more and more powerful.
Correct.
So the market then says, okay, is Microsoft, Meta, Amazon, who are taken out to the woodshed right now, are they justified in making this spend every 3 years? Because there's no profits behind it at this point, or de minimis.
There's barely revenue, let alone profit. Jeez.
Correct. So now the market starts to question that, and he comes on and says, well, actually, these have about a 6-year life. We have chips in existence right now that are 6 years old that are still functioning well. And now you're having this kind of quandary of, okay, you said this a year ago, and you're saying this now. And then the market, after NVIDIA's earnings, catapults higher on NVIDIA overnight because they blow everything out of the water like they have. And then it gets up the next morning and it's still on very solid footing until about 10:30 in the morning. And then all of a sudden you start to see the cracks form, and you see NVIDIA trade off, and it perpetuates down for the entirety of the day, and it trades off 2%. And by the way, that might not sound meaningful, but it was up 6% in after hours trading the night before.
It was a big swing. Yeah. It's funny. I've been reading more and more about this. There's an economist in Europe. Supposedly he's the world's most closely followed economist, which is odd because I never heard of him. His name's McWilliams. He called the AI chips digital lettuce. Basically, they wilt very quickly. So in his opinion, these are perishable and might be good for 18 months versus 6 years. And again, if you haven't done the math on that, that is a drastic profit impact if you had to depreciate over 18 months versus 6 years.
Yeah, they're running at a run rate, a lot of these companies at $100 billion a year. And it's like, okay, if we can't sustain that, and then by the way, boom, light bulb on the top of my head, you also have China now consistently coming to market with large language models, which is what AI is, that are consistently keeping pace right there, neck and neck with us, with a fraction of the compute power. Yeah. And so now it's like, DeepSeek took NVIDIA down 17% in one day earlier on this year. That was how meaningfully that, because it wasn't using NVIDIA chips, or it was, or a fraction, whatever, who actually knows. But at the end of the day, it didn't have the compute that our models have here in the United States. And now we're having more and more models come to market out of China that's showing the same information, but the market's not reacting to it, or hasn't reacted to it yet. So you've got that outstanding landmine that's sitting there as well.
Yeah, well, you want one more fly in the ointment. Here's my prediction for China in 2026. The DeepSeek moment in 2026 will not be another language model. It'll be a chip. I believe China, probably Huawei, will be releasing a chip that has just a completely different architecture that will be, I'm going to call it game changer. I don't know another word. It's certainly going to put the market on its head. And then that will be the first real competitor, right? Today, NVIDIA's got 90% of the market.
Yeah.
I'm going to guess by the end of 2026, really when you got 90% of the market, it only goes one direction. Now, in fairness, the market could grow, so maybe they're still ahead, but I think China is going to surprise us, not with another language model like DeepSeek, but with a chip, and that'll be wild.
Well, one of the most famous comments ever out of Jeff Bezos is, "Your margin's my opportunity." Right now, the profit margin on NVIDIA chips are 73%, which is just absurdity, right?
Absurd.
So it's no secret.
That's software numbers. Those are software numbers.
Exactly. This hardware company. Your point was well put there. And at the end of the day, like, it's no secret to anybody on this planet that right now NVIDIA is the largest company in the world. They do one thing exceptionally well, and that is what you need to disrupt. And so if you have, I don't know how many people are in China, 1 billion and 1.8 billion, something like that, 1.6 billion.
Big number.
Yeah, if you've got that with a centralized government pushing a narrative that we need to figure something out, that's a lot of brain power. And by the way, their kids are in math school at 3 years old and doing somersaults over top of our kids. So like the brain power,
calculus in kindergarten. Yeah, exactly.
Yeah, exactly. So
yeah, it's again, I think it's going to be interesting 2026. And I guess the last thing to talk about AI and kind of wrap this up is the thing that I think is a fly in the ointment. And I think, again, we'll see a lot of this in 2026 is the data centers you brought up. I think these data centers are going to be energy hogs. And you're going to see more and more cities, towns, areas, whatever, states say, no, thank you, because we don't want our citizens to have to pay higher electricity. And, these chips don't run if you don't plug them in.
You know what the lead article over the weekend was on CNBC was Texas warning for rolling blackouts. So they've got 170% demand request, 170% demand request increase versus last year at this time. So you now have just these mega consumers that are asking to strip electricity out of the system. I think I mentioned this on one of our prior conversations. I used to live in Indianapolis, and the southeast side of Indianapolis is Franklin Township, and it's a very kind of middle of the road socioeconomic area. They turned down $1.5 billion investment for a Google data center there because they didn't know what was going to happen with the electricity bills, right? And so at our firm, one of our lead investments has been for 18 months now, infrastructure. Infrastructure is the back end on it. And it's like, hey, do we want to play Google, Amazon, whatever at one to determine who's going to win this large language model contest and at multiples that are here? Or do we want to play the infrastructure on the back end that is a structured contract between that power generation facility and Amazon, Google, Meta for a 20-year period of time where they say, I will contract to buy every kilowatt of electricity out of this facility for 20 years.
Yeah.
Like I like the counterparty risk there over the U.S. government, right?
Yeah, amen to that. So I guess the last thing I remembered you brought up earlier, I wanted to hit on, and we'll wrap this one up, was these large purchases of AI chips. When this all started, in my opinion, it was bought from cash flow. That is no longer the case. Now it's debt. And, that debt has an interest rate on it. That debt has counterparty risk. We already talked about this whole open AI being at the center of all of this, it seems like revenue's bouncing around. It's crazy. But this could just be a ball of string that falls apart. I mean, it's wild to kind of tie these things together.
And I'll leave off on the comment just to play devil's advocate on the entire opposite side of this. We've said all this shit before, and tech has overcome all of it. So like, it's not a foregone conclusion, but there certainly are, to use your word, flies in the ointment.
There you go. Well, at the end of the day, you do this for the top 1% of the folks across the country. If somebody wanted to reach out and learn more, where do they go?
Yeah, right there on the bottom, lifegoaladvisors.com or lifegoalwealthadvisors.com/introduction.
There you go. And also, folks, follow him on IG. He does these 60-second clips that feel like 10 minutes of value almost every day, right? 7 days a week.
Yeah, well, I probably get 7 out a day, but sometimes it's multiple. Usually I take the weekends off.
Slacker.
Lazy ass.
Slacker. Lazy. Take care.